This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Joining us today is Scott Kaintz, the CEO of Corcel PLC, and Stephen Wong, a colleague of Scott who heads up the Flexible Grid Solutions, which is what we're going to be discussing today, the FGS side of the business. But with more of a focus perhaps on a recent RNS about capacity market auctions. So, the company's Avonmouth gas peaking project from a recent RNS has successfully entered into a T4 auction and has been provisionally awarded a 15-year capacity market contract by the National Grid. So this is very significant. Scott, what's your take on this, first of all?
Oh, this is a really big deal for us. I mean, we've been working on this through the autumn, and I'll let Stephen dig into the detail a bit more on what it means for the projects. But at a high level, I think it makes these projects more fundable and vastly improves the underlying economics, which allows us to layer on debt and really gets investors excited about the opportunity.
Okay. Well, Stephen, we've not spoken before, so I wonder if for the next maybe 60 seconds you could introduce yourself, just give us who you are and where you've come from.
Hi, Mark. Thanks for having me today. I've been working with Flexible Grid Solutions for nearly 2 years now. I joined in 2020 during the pandemic, formerly a capital markets banker, working in the natural resources sector, looking after oil and gas clients and mining clients, mainly early stage exploration clients. That's actually how I got to know Scott. And after raising capital for several oil and gas and mining clients, I decided it was time to sort of pay for my sins and move into the renewable flexible energy space. And that's where I am now. So I head up FGS and I look after the company's battery energy storage projects and the gas peaking projects, from origination through to development and then on the way to funding as well. And I'm very happy to be here. I think I'm very lucky to be here as well. It's a very exciting place to be, and I'm looking forward to really taking these projects through to financial close and into construction finally energizing them.
Perfect. No, that's good. Thank you very much. So a couple of highlights from that recent RNS. The auction cleared at a record high of 30.59 kilowatts per annum, and the Avonmouth project has been provisionally awarded a 15-year capacity market contract with the National Grid, providing a gross revenue of 1.5 million. So it all sounds very good, but what does it actually mean? So I've got a few questions for both you, Stephen, and Scott. And the first one, what is the capacity market and what is its purpose for the UK grid?
No, I'll take that one. I mean, capacity market basically is the grid making sure that there's enough capacity, enough power available during times of stress. And that's usually, certainly here in the UK, when the wind isn't blowing, they want to ensure that there's enough backup generation. And so that can take the form of different things. We can talk about gas peakers, battery storage, these sorts of things. But basically, it's about ensuring supply. And so they put out a series of auctions. The auction we referenced the other day was the T4, which is a very long 15-year auction. And then there's T1s, where you bid on a sort of yearly basis, and prices tend to be a little bit more volatile at the moment, quite high. But the bottom line, what this is really trying to do is ensure that when you want to turn your light on, there's enough power available. And that means other assets may need to flip on when these renewables that we're all installing aren't there for us.
Okay. So what about the time, this 15 years? How does that come into it?
Well, that's what the T4 is. So effectively, when it says T4, you're agreeing to provide a certain amount of power in 4 years for 15 years. So if you think about it from the project point of view, we've now underpinned 15 years of revenue with this guaranteed, subsidized, effectively government payment. And the real interesting thing about it is that traditionally these assets don't even have to be used. They don't actually even turn on. So you get paid to stand by, to be there, to be available, to be there in a crisis effectively. And historically, I think it was 2016 was the one time that the sort of mechanism was triggered. That's where they said capacity market providers be ready to turn on. They give you a certain amount of hour notice. and then you're supposed to turn on. And that one time it was actually triggered, they actually canceled it before it was ever turned on. So if you think about it from the project point of view, you're being paid to most likely do nothing for 15 years. And that's why it's so attractive. I mean, if you just at a very fundamental kind of simple point of view, it's sort of a guaranteed floor on these projects. And then we can try to layer in trading upside on top of that.
Okay. So it's about securing capacity for the grid, a guaranteed capacity, but it's unlikely that it would be called upon.
I mean, we might argue that point. But historically, it's really only been called on a handful of times and like triggered actively, I believe, this one time, and never actually used. So those providers didn't actually have to turn their plants on. They were just notified of a potential turn on, and then it was canceled.
And this is because most of the capacity is coming from the big plants, is it? And
big plants, nuclear, but really it's about the penetration of renewables. That's why this has become probably more attractive. If you think about it, if you've got coal plants, they don't really need a lot of backup. I mean, unless you think we're going to run out of coal and things like that. So this has really become more in focus because of the shift to renewables. Once you put half the UK operating on wind and solar, well, when the wind doesn't blow for 4 days, you've got a real problem, and you need these kind of backup assets to be available. So you effectively go to an auction, you bid into it, and you are paid in the future, like I said, for a certain period of time to be available. And they check out your machinery, they check out your site, they make sure, this meets our needs, this can provide the power you actually say it's going to provide. So it's not that this is not done with a lot of. It's a very thorough process at the end of the day. But from the economic point of view, if you think about it, it's a no-brainer, right? I mean, you want these assets to be in capacity market because they can potentially be paid for nothing, and meanwhile traded and used for other things. So you can get paid for that standby while you go ahead and use the asset normally, which might be not an emergency situation, not a national grid activation type situation, but just day-to-day trading.
Okay. And the price then, so okay, you've got the years, you've got the 15-year, you have to guarantee the capacity, but the price, I assume, can change, that you'll get paid for that over that period. That's quite a long time.
Yeah, Stephen could probably jump in on this. I mean, he's looked at this in detail. It's quite interesting to look at the history of what capacity market closed at this year, what it closed at in past years, and where we kind of think that's all going.
Yeah, I can step in there. So, Mark, just a little bit of background on capacity market. Capacity market was sort of implemented following the electricity market reform in June 2014, and as Scott said, the capacity market, really what it is, it exists. It's designed to ensure that there's sufficient reliable capacity available, and it pays investors. Well, it pays developers and investors. It encourages them to invest in new capacity and for existing capacity to remain open. Now, what's very interesting is that the capacity market payments have been rising in the last few years. And Scott alluded to there being a T1 capacity market auction and a T4 capacity market auction. Now, we entered the T4 capacity market auction, and the T4 capacity market auction cleared at the highest price, as you mentioned earlier, which was £30.59 per kilowatt. Now, if we compare that to previous years, so last year's T-4 auction cleared at £18 per kilowatt, and the year before then it cleared at £16 per kilowatt. So what we had modelled originally was we assumed that the T4 auction would clear at around the £20 mark. So the fact that it cleared at £30 per kilowatt is absolutely incredible. It's it's a much better result than we were hoping for. I had a small inkling that it might clear at around the £25 mark, but to clear at 30 is really, it goes above and beyond. So effectively, the capacity market payments that we'll be receiving for the Avonmouth project are 50% higher than what we've modelled.
Right. And is that price due to ongoing market conditions, i.e. inflation and the increasing energy prices in general?
I think it's due to a number of reasons, Mark. One of the reasons is security of supply. We've seen what's been happening in the energy market, and consumers can feel the immediate and acute effects of this. We've become accustomed to sort of having reliable and instantaneous power, an unlimited supply of electricity, and this comes at a price as well. As we transition across from baseload into sort of more renewable energy focused supplies of energy, there's increased intermittency, and that's where gas peakers and that's where batteries come in. On top of that, there is the question of war that's taking place in Ukraine at the moment, which has pushed energy prices up. The UK is in a very fortunate position because we're not hugely dependent on Russian gas. I believe Russian gas only accounts for around 3% of the UK's gas imports. However, Europe as a whole relies on about 40% of its gas imports from Russia. So that will have an effect on the gas price. But what that's causing, what's going to happen is that it's going to increase volatility in the electricity markets, and that's going to be hugely advantageous for our peakers.
Yeah, okay. I mean, my take on it is, National Grid is just really concerned. I mean, that's why they're paying people more to stand by, because they're just real concerns that as we continue to take base load offline, as coal is now pretty much dropped away, as nuclear plants are retired, they have real material concerns there. And they want assets such as our gas peakers to be available. And how do you incentivize that? Well, you pay for it. And this is their sort of mechanism to incentivize.
Okay. I think another thing I'd like to add to that, Mark, sorry to interrupt you, is that people may have noticed what happened in the T-1 capacity market auction, which cleared at a staggering £75 per kilowatt, which is the cap. That's the highest price you could possibly. That's the price at which the auction starts at, and that's never been seen before. So last year's T-1 auction cleared at £45, which left the industry absolutely gobsmacked, because prior to that it cleared at £1. So you imagine, the change from 3 years ago being 45 times increase and a 75 times increase. I mean, if you put that in the context of your bills, the bills that you pay, or even maybe your salary, something that people can relate to, 45 times or 72 times, 75 times bump in the salary would be a very nice thing to have.
Yeah, definitely. Yeah. So that's T-1. So are these can you just explain the T's? And you've got T-1, T1, and T4.
T1 is just, I'm providing power in 1 year. T4, I'm providing power in 4 years for 15 years. So sorry, okay. In 1 year for 1 year, in 4 years for 15 years. Okay. That's the way. So T4 is obviously a huge amount of time, much lower price. T1s, they tend to fluctuate because it's real short term. So if you think about what they're doing, they're taking a long bet to lock in 15 years at a low price, and then they're supplementing it with these T1s. And they can jack that up really high, as Stephen said, up to 75K in this case, 75,000 per megawatt, which is huge. If they really think there's going to be a short-term shortfall. So the way I would read that is they're incentivizing you to build stuff over that long period by giving you that long-term contract, but they're also really incentivizing stuff to go on or stay on in the short term by giving you these really nice T1s. But the way from the project point of view is we layer that together. So you try to get into a T4 that gives you something that guaranteed revenue in 4 years, and you layer T1s in front of it to bridge yourself to the T4. And then you end up with 20 years effectively of guaranteed subsidized revenue, which really boosts the economics.
I see. So what kind of projects generally enter the capacity markets then?
Steve and I could talk about it jointly, but I mean, basically, peakers are almost perfect for it because with a gas supply, you can run for a long time. And so you get a large part of the auction price. If you look at some of our other projects, for example, we've got our battery storage project up in Burwell. Those batteries can only operate for an hour or two at most. And so by definition, that's not really helping you when the wind is not blowing for a weekend or something like that. So they derate that quite a bit. And what that means is you can apply and play in that space. You can get capacity market, but you don't get the full amount. So if they award you 75K, you get a fraction of that number. And it's a heavy derating on some of the batteries. And each type of asset has a different rating to it or derating to it. And that's them adjusting it for what you're bringing to the fight, what you're bringing to the table, basically.
Okay. So as well as Avonmouth, then, were any other projects entered into this year's capacity market?
So no, we did not enter our second project, Tring Road, and that's in part because it costs quite a bit of money to do so. So it's a £500,000 deposit that you have to put in place, and it's kind of indefinite. I mean, you get it back eventually, but not right away. So we took the view with our partners to go ahead and enter Avonmouth, to hold off on Tring. with the idea that Tring can be entered next year. I mean, it doesn't really get left out in any meaningful way. It can enter T1s and you could apply for a T4 next year. So it's just a bit of a staggering thing. And we've always had a plan with trying to fund and build these assets that one would probably lead slightly on the other. So it's certainly looking, I think, with this capacity market win, that Avonmouth probably would be the front runner on that. You would stagger that second asset and then apply and go into CM in future years.
But this is clearly a big milestone for that project to have this contract secured now. Now you just have to deliver on it, I suppose, do you?
Deliver on it and fund it. I mean, what we have left to do here is get an investor or series of investors to sort of agree to write the check. But when they look at the economics and they say, wow, I mean, a big chunk of this is now underpinned by the government, even if the asset is turned off, that starts to look pretty good. And it makes, some investors have a lot of risk profile. They're willing to go in and trade the asset, take a lot of risk and let it all play out. Other ones, they really want to make sure that they cover their bases. And that's where the CM is really an important part, because it kind of covers your baseline costs and there's no chance that the asset could really lose money. So this helps us to appeal to that more conservative investor. And, and that really varies by investor types. I mean, we've had, and we are having a number of different conversations with different types of investors. And it's really interesting to see the kind of the different risk profiles there that they're interested in.
Because I assume this will really change the underlying economics of the project then for potential investors.
Yeah. So when we've quoted some numbers, I think the numbers we've used historically, 72 to 92,000 per megawatt. So in that number was an 18,000 per megawatt capacity market assumption. So now you have to add that. You really should more than double that, take that up into the 30s over the 15-year period, and then tack on that trading above that. So, it might be realistic now to assume that these assets could be making in the 90s or over 100 per megawatt, which start to become extremely attractive. If you want to assume some T1 contracts labeled in there at 75 grand of guaranteed revenue, then you could possibly be talking 150,000 per megawatt. And those numbers start to look really, really big, certainly in the short term. So these are the conversations we have with investors. They look at our financial models. We sort of debate this all out. We talk to the people who are actually going to trade the assets themselves. And the idea is to bring all those, all that together and go ahead and fund the assets at what we call financial close. And that's really what we've been working on for granted some time now.
Yeah. This brings me on to another point. It has been going on for some time. Is there a reason why any of these FGS projects have not been able to complete already? I mean, you've had interest in or options over, let's say, but none have actually been ticked off yet.
Yeah, no, it's a fair point. And I think, you got to look project by project. I think in the case of the peakers, I mean, we're trying to get investors to write a 55 million pound check. And unlike AIM companies, which can move very quickly, big infrastructure funds, other investors like that, they have a real process. They've got to get comfortable with the sector. Some of them have to get comfortable with the UK. Then they have to get comfortable with the projects. They ask a lot of questions. We go back and forth. They want to talk to external advisors to make sure what we're saying makes sense. So, there's just a lot of complexity around it. And I would just make the point, and this applies, I think, to our Burwell battery as well. We've gotten into these assets at very low entry points. I mean, the cost has been nominal. And so you kind of have to think of it a little bit like mineral exploration at the end of the day, right? When you go to do some initial work, some field work on a site or even an initial drill campaign, a lot of times they don't work. And to some extent, that happens with some of these projects too. Now, I mean, we're certainly not ready to write these off yet. In fact, I think we're pretty bullish on them at the moment. But I think it would be helpful to investors to understand that, it's not just a matter of filling out some forms and waiting for it all to come good, right? I mean, it's a back and forth. Investors ask you to modify aspects of projects. They're not going to write us a 55 million check over a weekend or a 2-week period. And so we've been sort of moving these things forward and trying to get them to financial close. And I think, we're pretty comfortable with it. I mean, it's not done till it's done. But I think, capacity market really does help these two assets, or certainly one of these assets. And I think it points towards the other one to get done. I think if you look at something up at Burwell, for example, I mean, we had a very low cost of entry there. We developed it as far as we could, and we ran into grid congestion up there. I mean, it's not something you can really anticipate. That's something that the grid came out, somewhat later in the process and said, we need to do some upgrade work, and we'll let you know how that's going to play out. And that's kind of where we're at. I mean, we've announced that. So it's a little bit out of our control, and frankly, it's very common. I mean, if we talk to some of our peer groups around the UK, everybody's running into these issues. The grid is jammed. Every time you put a new project in some of these areas, you're making it more complex. You're needing more infrastructure, and upgrades have to be done. So So I think we're running into fairly normal issues. And I guess I would just sort of point people to maybe do some more research. Obviously, we're happy to talk to people, but it's a little bit of an educational thing I think we have to do to explain, that many of these projects, when you start from zero and you get in at these price points, are not going to finish. But when they do finish, they're going to give you that real meaningful upside, that sort of game-changing upside. And obviously, that's the game we're at. I mean, we're a relatively small company, relatively high cost of capital. We're here to place those kinds of intelligent bets with real meaningful upside.
Okay. And are there lots of these projects sort of in the works, not just with Corcel, but with other companies in the UK? Is there quite a lot of players?
All over the place. And that's why, for example, up there at Burwell, the grid needs this upgrade, because there's battery after battery after battery, solar farm, all trying to jam into the same infrastructure. And the grid just, at some point they hold up their hands and they say, okay, we know we said we'd let you connect at 50 megawatts, but that's not available right now. You're going to have to wait until we kind of work out the mess a bit here and get things sorted. And that, to some extent, is what's happened there. So yeah, I think it's these are big bets. I mean, they're not quite as big as opening $1 billion mine or anything like that. I mean, they're relatively smaller, but they're not things that tend to sort of just finish in 10 days. And we're getting in early stage. Again, if we do pick up any, or if you see any kind of similar of our peers picking up things very advanced, I mean, that's different. If it's shovel ready and funded, okay, I mean, then it's just a construction problem at that point. But we're picking up things earlier cheaply, and that just implies different levels of risk there, maybe around the lease, maybe around the grid, maybe around, different aspects. And we need to, what we're being paid to do is take those things, solve those problems, and get these things over the line. And so with the peakers, we're there. I mean, we've acquired them at different stages. We've kind of done the dog and pony show with all the different investors. And now we're just trying to get, a investor or a group of investors to commit to that final check. And we believe that this capacity market really should enable that.
Okay. Do you share perhaps in the frustration with shareholders on the timescales here, with some of these projects probably going on for sort of over 2 years, maybe? I mean, I guess you're as keen to get them completed as any shareholder, really. Do you feel the frustration?
I'll let Stephen chip in on that, but I'll make one point. I mean, investors always talk about delivery, right? And it's kind of funny because you think about it for a second. You're like, okay, so there's an imaginary lever over here that I'm not pulling to deliver the project because I'm doing something else. I mean, it's almost inconceivable, right? I mean, or I'm like if there's a lever that Stephen and I and the team can pull to get these things done, we will pull it. If it's not done, it's because there's something out of our control. Either the investor, as I said earlier, in some cases they want to go do internal reviews. Maybe they don't like the sector. I mean, to be fair, and I think I've mentioned this before, we had a lot of people look at our fossil fuel gas peakers and say we can't touch fossil fuels. They just wouldn't go there. So you go through a lot of those processes. You get a lot of no's before you get a yes. But at the end of the day, let's be honest, we only need one yes. But you can rest assured, and I'm happy to have Stephen kick in because he's sort of closer to the road on this. But yes, it's frustrating, but you can rest assured we are doing absolutely everything we can to deliver these projects, and we would be fools not to.
Mark, I can sense the frustration coming from Scott's voice, but I can assure you that our battery projects and our gas peaking projects are probably the last thing I think about before I go to bed at night, and the first thing I think about when I wake up in the morning. I think Scott covered he covered all the issues fairly well. But one thing I'd like to stress is that these are multifaceted projects. They from the outset they might seem very simple. People might say that all you need to do is buy a bunch of batteries or buy a few gas recips and stick them in the field and connect them to the grid. It's not quite that simple. We're dealing with lots of different types of landowners, from the more professional landowners to farmers, people who, one-man bands who've inherited a piece of land and, aren't really that clued up when it comes to lease negotiations. We're also dealing with councils and planning committees, and they've been backed up. But they've been using, unfortunately, they have a huge backlog of cases due to COVID, and it hasn't been cleared yet. So planning permission takes a lot longer than it traditionally has. What usually takes 3 to 4 months is now taking 6 months plus. On top of that, we're dealing with the DSOs or the DNOs. So we're dealing with the utility companies. On the battery side, we're dealing with the electricity supplier. On the gas side, we're dealing both with the electricity supplier, the DSO, and the gas supplier as well. So we're dealing with two people there. And then on top of that, we've got the national grid who we have to deal with. And let's face it, they all, they play at their own pace. I mean, they're very good. Some are better than others, and they give themselves deadlines of when they want to come back to us. But ultimately, if it takes longer, it takes longer. And unfortunately, that's beyond our control. If there's, like Scott said, if there are magical levers that we could pull to get this, to move these projects along faster, I'd pull every single one of them. But unfortunately, we just can't do that. But I think investors can rest assured that the projects are in good hands, and we are working hard to push these forward and get these completed as soon as possible. And like Scott said, in the investors that we are dealing with, they are going through the DD process, and they want, it's important that they understand every part of our business model. They understand the work we've done, and they have to be comfortable that they have to be comfortable and confident in the work we've done and our ability to deliver on them. And that's what we're doing at the moment. So fingers crossed we can have some good news sometime soon.
Yeah. Okay. So these sort of hurdles that you speak of and all the things you've got to go through that kind of slow it down, does that also frustrate the funding then as well from the investors? And at some point down the timeline, down the path, do people get that, okay, that confidence now, we're at a certain milestone now that we are confident now that this is going to go ahead and things can really start moving? Just to try and get an idea of how the hurdles you've got to go through affect how you work with your
the two metrics are usually shovel ready and financial close, right? So we wouldn't show an asset to an investor until it's at shovel ready, because they're not interested. I mean, there's still real material risk. So, that really explains the Burwell problem, right? I mean, we couldn't quite get it to shovel ready because there's grid congestion there. So until we get that point, we're not going to go out and really try to fund it. But I would just point out, we are trying to establish relationships with very large institutions who want to write big checks over and over and over and over. So you have to, this is an initial relationship. As Stephen quite rightly said, they're getting to know us. They're getting to know the sector in some cases. And really what we want to do here is rinse and repeat. So the way I'm looking at it is, it's like pushing the snowball, right? You push it down the mountain a little bit and it starts to build. And pretty soon you've got the pretty good momentum there. And we're doing project after project. I think you can expect to see that. You can certainly hope to see that whatever we do on these first projects, we would then continue to work with that investor, and it'll probably be quite a bit quicker, if I'm honest with you, to do the next asset. So asset 2, 3, 4, 5, 6, like that. These big investors don't want to write small checks. They want to write multi-100 million pound checks. And so think of it as us doing relationship building, doing that kind of hard slog at the beginning to open up not just these assets, but the pipeline of assets that we've been working on behind the scenes, much of which we, frankly, haven't brought out into the public yet, with the idea to rinse and repeat every couple months. It's an exciting thing. I think Stephen will tell you, we're trying to build FGS up into, a very big part of this company. It's potentially, outdoing the mining side, certainly in the short term anyway. So, you've got to sort of keep your eyes on the goal. We've got to get the first 1, 2, or 3 across the line. And then I think you're going to see, we'll, continue to expand our team, and you'll start to see that pipeline come into fruition there. Shovel ready, financial close. Financial close really would be the next milestone. That's what investors should be looking at on these two gas peakers, would be the announcement that an investor has committed to fund either one or probably both. That's certainly the way we've been marketing them to date, although never say never. I would remind people that the Avonmouth project does have an extra grid connection attached to it that we have rights of refusal over as well. And we've always kind of debated what to do with that. And current thinking is we probably want to put a battery in there, and we're actually looking to do some upsizing on that connection. So it's quite interesting. These projects, they start out as one thing, they evolve a bit. Avonmouth's starting to evolve in something really quite large. And so no promises on that yet. That's something we're just kind of working on in the background. But you could certainly understand that if somebody agrees to fund one part of Avonmouth, then they're more than likely going to fund the next part of Avonmouth, and so on and so on and so on.
But the company are in active discussions, aren't you? I think from an RNS early February, you mentioned that you're in active discussions and hopefully announce something to the market in due course.
Yeah, this is day to day, week to week. Like I said, there's some weeks where they reach out to Stephen and I, and they have a bunch of questions, and then there's other weeks where they're really working more internally. Where they're sort of doing their own internal process. But by all means, we've said that publicly before, and I can confirm it that we're continuing to have these active discussions. as I said earlier, I mean, CM fell quite nicely in the middle of that. This capacity market auction contract has fallen in the middle of it. And I think only helps to facilitate getting something done.
Yeah, well, I was going to come on to that. Yeah, that this development at Avonmouth really must is a big milestone moving these things forward. I don't suppose you have any idea where I can't ask you when you'll announce financial close.
No, I can't say that. I mean, obviously, we have to be a bit careful with those things. But I mean, yeah, it's a process, right? It's funny the way these processes work. I mean, I think, again, we gave you a little bit of color around it. It's the kind of thing that feels like it can drag, and then sometimes they do move very quickly. When an investor makes up their mind and they're on with it, then potentially it's quite soon. But yeah, I mean, we've got to let the processes, which really are, like I said, not our processes, but these investor processes kind of play out. We've got to give them the space they need. We have to answer their questions, obviously. And I think we've done a great job so far of being professional, of being seen as legitimate. We've introduced them to some of our partners, which kind of, I think, makes clear that it's not just Corcel and FGS. It's a bigger group of entities here you're talking about. And people start to get excited about pipeline and how we could do further things, together. So yeah, there's some work to be done here, but every day that goes by, we are one day closer to being able to announce that it's all signed off, funded, and Corcel is on its way to owning a chunk of and potentially being involved in the operations of 2 gas peakers. Okay,
excellent. Stephen, I wonder if I can just ask you something. Scott, you mentioned there about sort of people getting excited, and Stephen, you said the last thing you think about is FGS, and the first thing you think about is FGS in the morning. That's very nice. So you obviously, and I can see your excitement as well when you talk about it. So I wonder if I can maybe get your feeling of SGS. How do you feel about the whole idea, the whole project, and how it will really be part of the national grid power solutions for the long-term future?
Sure. I mean, what we're doing at FGS is hugely important, not just for Corcel and for its shareholders, but for the UK as a whole. What we're setting out to do at FGS is really supply security of energy to the UK. And our assets, even though they're called gas peaking assets, these are renewable energy enablers. So what they allow the country to do is to transition from coal-based load over to solar and wind. We're smoothing out the peaks and the troughs. So that's why they're called peaking assets. And they're hugely important to the UK, hugely important. Without these assets, quite frankly, we're going to experience a lot of blackouts. And that's why I believe in the projects. I believe in the projects because they are needed, they're necessary, and they will be built and they will be funded. Question is, who is it going to be done by? And we spent the last few years working on this, and we're really at the forefront of the game. It's a very small industry. A lot of people know each other within this space, and we've built quite a good name for ourselves over the last 2 years, I'd say, Scott. And
good network as well. I mean,
really good network.
FGS has been built from zero, basically, and I had known Stephen in a former life, and when I sat down with him a couple of years ago and talked about maybe come and join us with FGS, I think, as you quite rightly say, Mark, I mean, there's just what better place to throw oneself into is the sort of transitional energy space. I don't think there's anything hotter in the world than becoming an expert in that space, frankly, building a network in that space and then executing in that space. And that's really what FGS is here to do. I mean, we're not here to create RNSs for fun. I mean, we're here to build something real, to do partnerships and raise money from big, serious institutional investors, and ultimately to build out a portfolio of these different assets to make a difference in the UK, because that's what's needed. And to some extent, we're doing the hard work. I mean, as I said earlier, a lot of funds have sort of decided, well, we can't really touch fossil fuels because we don't want to put it in our annual report. But FGS has been willing to go find those kinds of assets because we understand that they are required. And that's what National Grid is saying. So we have a disconnect between kind of the investing community and the underlying funders of these assets and the National Grid, the National Grid itself, who says you have to have them for the next 30 plus years. So I really like where we're positioned. I think Stephen and I both like it. I mean, we're doing the hard slog of finding the investors who recognize that, who recognize that we need to keep the lights on, that fossil fuels have to be part of the transition, that we can't just magically make them all go away. And we need to continue to build these assets. And granted, we're building them in a super efficient manner. We're using the best engines we can get our hands on. So they're as clean, as they possibly can be, but they're also required. And so I love our positioning. I think it's great. I mean, the batteries are excellent as well. Obviously, that's a very hot space at the moment. But the economics, and again, I hate to go back to it, but the economics, just from what we talked about with capacity market, are fantastic for these assets. So it's about matching, the right investor up with the project. And I think our positioning there is great, and we're set to make a meaningful difference.
Okay, well, good to hear. Just a final question: are there any projects that can perhaps be compared to up and running projects at the moment that people can compare to what Corcel want to bring online?
It's an interesting question. I mean, there certainly are gas peakers around the UK. A lot of them are smaller. There's some diesel peakers around. We've kind of positioned these assets as kind of gas peaking 2.0. These are, as I said, cutting edge projects with because of the engines being so new and so efficient. So they're built to run. I mean, some of these older peakers were kind of built to really just do capacity market in a sense, to get paid to never turn on. We want to get paid to not turn on and turn on and trade the asset. And so I'm not sure I know of any direct comparisons. We can find a variety of sort of smaller, lower megawatts of kind of earlier stage peakers, some of which can be bought at the moment. I mean, some of those things, especially diesel, if you think about it. I mean, nobody's too excited to run kind of diesel peakers at the moment, right? So we're positioning this as the final fossil fuel transition required, and I wouldn't necessarily compare them directly to too many of these older projects. Stephen may have a few comments there as well.
No, I agree entirely with Scott. We're not in the business of buying dirty old diesel generators or, old, first generation gas peaking assets. We want to build the latest generation assets because these are probably going to be amongst the last gas peaking plants built in the UK. So if they're going to be some of the last ones built, we want to make sure that they're the cleanest and the most efficient out there. There's also the hydrogen question, and I don't really want to go down that route, but there's potential for conversion to hydrogen with these newer engines at some point in the future as well. But yeah, our intention is to use the latest cutting edge technology with very, very high efficiency ratios, and these are going to be as clean as they can be. Another thing you have to understand is that gas peakers are not, gas peakers can run indefinitely, but we are limited as to how many hours we can run each year because of the carbon emissions. So they're not designed to be running throughout the whole day. They're not going to be emitting carbon throughout the whole day. It's only just for a few hours a day. That's all they're used for.
And during these key periods where, like you said, we all read the news, right? I mean, last autumn when the wind just didn't blow for 4 or 5 days, I mean, it was a real disaster here in the UK, right? And so these are the kind of assets that help bridge that gap when we're we as a grid, we as a country are really stuck, which seems to be happening more often than it used to. And I think, we know why, because we're turning off base load and we're being more and more dependent on those intermittent renewables. So I think these assets are positioned quite well, and could you compare a peaker to a peaker? Theoretically, yes, but I think the way we're going to operate these is fairly unique.
Okay, great. Well, thank you very much, Scott Kaintz and Stephen Wong from Corcel PLC. Thank you very much for your time, just going into a bit more detail there on FGS and, of course, capacity markets. Thank you.
Thank you. It's great to be here.
Thank you, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.